Hot off the press, the East Asia and Pacific Economic Update expects the Chinese economy to continue to slow down gradually as it rebalances towards consumption and services. The World Bank kept its forecast for China's economic growth at 6.5% for this year and projects a growth rate of 6.3% next year and 2019, compared with 6.7% last year.
We're hoping that economic policy will move to address some of the macroeconomic vulnerabilities that have built up since the global financial crisis, including the problem of deleveraging and the credit expansion. And we think that if they pursue those policies seriously, that will have a somewhat dampening effect on economic growth.
In comparison, the Asian Development Bank last week also projected China's gross domestic product to grow by 6.5% this year and a more sluggish 6.2% in 2018. The main challenge to inclusive growth in China is the gap in living standards between rural and urban areas. The World Bank expects poverty reduction to continue and the extreme poverty rate to decline by 0.4% by 2019.
China certainly has a very well-developed program for poverty alleviation. Part of the focus needs to be on providing services, making sure that public services are at minimal levels of standards in all parts of China, and focusing quite a bit on children to make sure that children have in poorer areas still have the opportunity to receive higher quality services.
Financial stability risks associated with the rapid build-up in domestic debt, including by local governments, are a key near-term challenge. Credit to the government and the private non-financial sector increased by 16.2% last year, up from a rise of 15.1% in 2015. For China, the report also says that the government should step up its efforts to reduce corporate debt and restructure state-owned enterprises, tighten the regulation of shadow banking, and address the rising household mortgage debt issue.